What if I told you the two most powerful forces in American housing are about to be auctioned off to the highest bidder? Not some startup, not a new Wall Street darling, but the government-sponsored twin titans, Fannie Mae and Freddie Mac, are being lined up for one of the biggest IPOs in history. And almost nobody's asking why. Before we dive in, take a breath and pour that coffee. Because today's story isn't about real estate. It's about control. It's about how Washington uses housing to shape the American dream, and how, behind the scenes, that dream is now on sale. We'll trace the fall and resurrection of Fannie and Freddie, unpack the Trump doctrine's logic, and look at what this really means for your investments, your mortgage, and America's future. Let's begin. 2008 didn't just kill Lehman. It broke Fannie Mae and Freddie Mac, the two mortgage giants that guaranteed trillions in home loans. When the panic hit, the U.S. government didn't let them fail. It seized them. They were placed under conservatorship, a legal purgatory where they still exist, but Uncle Sam calls the shots. And they've been stuck there for 17 years. But now the Trump team wants to set them free, to take them public again, sell their stock, raise capital, and unwind the Treasury's 80% stake. We're talking about a move that could raise $250 to $300 billion. That's not just a stock offering. That's a restructuring of the mortgage state. If this sounds familiar, it should. Every empire, when stretched too thin, looks to monetize control. Thatcher sold off British gas. Russia auctioned oil monopolies. China floated its state firms via H shares. Now it's America's turn. This isn't innovation. This is austerity dressed in opportunity. Selling Fannie and Freddie is the modern equivalent of selling the silverware to pay the mortgage. And yet investors are cheering. Bill Ackman's fund, Pershing Square, which owns big stakes in both firms, saw gains of 51% on Fannie and 42% on Freddie in a single week. Because Wall Street smells blood and opportunity. So why now? The answer lies in the 2025 political calculus. The Trump administration is moving fast to reshape major institutions, reclaiming federal assets, boosting government revenue without raising taxes, and consolidating control over key economic levers. Fannie and Freddie are perfect for that narrative. Massive federal assets, transformed into private capital liquidity. No need for congressional approval. But here's the twist most analysts miss. Privatizing the GSEs doesn't just raise money. It changes how housing finance works in America. Right now, their mortgages carry a whiff of government guarantee. Take that away, and you raise risk premiums. Raise risk premiums, and you raise mortgage rates. So yes, your 30-year fix could go from 6.5%, 7.2% overnight. Not because of the Fed, but because of Wall Street ownership structures. So who wins here? Hedge funds like Ackman's Pershing Square and Paulson and Co. have held these positions for years, playing the long game, betting that the government wouldn't be able to keep the GSEs on a leash forever. This is their activist vindication moment. IPO underwriters stand to make billions. With projected capital raises between $250 and $300 billion, underwriting fees alone could top $3 billion. For them, this is Wall Street's Super Bowl. Private capital, shadow banks, mortgage aggregators, and insurance companies are licking their chops. For years, they've been blocked from scale by federal control. Now they'll have a chance to buy mortgage flow without the legacy constraints of conservatorship. But the real move is what comes after. If you're watching for knock-on effects, here's where to look. Mortgage REITs like NLY and AGNC thrive when yield spreads widen. That's exactly what happens when credit guarantees evaporate. Mortgage-backed securities ETFs will become a battleground. Those trading on assumed credit quality might see price whiplash if foreign investors back off. Regional banks, meanwhile, are left holding the bag. They've been loading up on mortgage paper for yield. Now they face repricing risk without the balance sheet muscle to hedge effectively. And let's be honest, this shift isn't just about yield. It's about who gets to own the risk and who gets to eat it when the tide goes out. Here's the angle you won't see on CNBC. America's mortgage system has functioned as a stealth form of sovereign borrowing. Foreign buyers, China, Japan, the Netherlands, Gulf states, didn't just buy treasuries. They bought agency mortgage bonds with backing from Washington. If Fannie and Freddie go full private, that backstop becomes murky. And trust me, global funds notice. They'll demand higher yield or worse, rotate into Eurobonds, gold, or emerging market infrastructure. Places where returns are rising and risk is more predictable. That's how cost of capital creeps upward across the board. So the question becomes, does a stronger privatized Fannie and Freddie give the U.S. more flexibility, or does it quietly erode one of its last weapons of monetary influence abroad? Because remember, when foreign buyers sell MBS, they sell dollars. And when dollars weaken, so does the empire that prints them. Here's the hard truth. It doesn't build homes. It doesn't fix zoning. It doesn't lower rent. It financializes the mortgage system even further, handing control from government stewards to capital markets. The average American will still face $400,000 average home prices, stagnant wages, and down payment hurdles that now exceed 10 years of savings for most millennials. This is policy theater. We are watching the illusion of reform with none of the build. And while the headlines will tout a return to normal, the new normal will be less affordable, more volatile, and completely owned by the private sector. History shows us that every empire, when pressed, turns to its assets. Rome taxed grain. Britain sold rail. America, it's selling Fannie and Freddie. This IPO will be packaged as modernization, but underneath the branding is something older. It's liquidation, it's reallocation, and it's a quiet surrender of state power to capital interests. But there's a window here if you're sharp. Use this as a signal to reposition your bond portfolio. Watch mortgage REITs rotations. Track foreign MBS demand signals for clues on broader US dollar sentiment. Because when the rules change, opportunity floods in for those who saw it coming. If you found this helpful, share it with someone who still thinks housing policy is boring. Drop a comment. Do you think this IPO will help or hurt America's long-term economic stability? And if you want more sharp takes like this, subscribe. History rhymes, power rebrands, stay inquisitive.